Hey everyone, I'm Maria Tossie with the Tossie Advisory Group, home of the Stock Investing for Poor People series, and the movement that's teaching everyday working people how to take control of their financial futures. Welcome to the brand new series, Investing for Complete Beginners, the Tossie Advisory Way. Now before we get started, I want you to take a deep breath and let go of any fear or hesitation you've ever had about the stock market. You don't need a finance degree, a Wall Street broker, or thousands of dollars to start investing. You need understanding, consistency, and the right mindset. That's what we do here at the Tossie Advisory Group. We make investing simple, relatable, and real for everyday people, especially hourly workers, single parents, veterans, and anyone who's tired of watching their paycheck disappear week after week with nothing to show for it. In this beginner series, I'm going to walk you step by step through what real financial literacy looks like, not from a textbook, but from lived experience and proven systems. We're not chasing trends or overnight riches. We're building long-term financial security, one stock, one page, and one disciplined move at a time. By the end of this lesson, you'll have two essential skills that most new investors never learn. 1, you'll know how to read a stock chart and make sense of what you're looking at. And 2, you'll know how to read the key financial data that tells you whether a stock is a good investment or something you should avoid completely. Let's get into it. First, open your browser and go to financed.yahoo.com. Yahoo Finance is completely free, and it gives you everything you need to get started, from stock charts to company information to the latest news. When you get there, you'll see a search bar right at the top. Type in the name or ticker symbol of the company you're curious about. For example, Apple's ticker is AAPL, Coca-Cola is KO, and Intel is INTC. You can search any company, US or international. Once you click on the result, you'll land on that company's stock profile page. Now this page might look intimidating at first, but I promise by the time we're done, it'll make perfect sense. At the top, you'll see the current stock price and today's price movement, how much it's up or down for the day. Beneath that, you'll see a chart showing how the stock has moved over time. And below the chart, you'll find all kinds of important financial information. Things like earnings, dividends, market cap, and valuation ratios. These are the tools every investor uses to decide what's worth buying and what's worth skipping. Let's start with the chart. Click on 1Y for 1 year and 5Y for 5 years. These two views tell the story of the stock's journey, the short-term momentum, and the long-term trend. When you look at Apple's 1-year chart, you'll see the ups and downs, the pullbacks, and the rallies. Hover your mouse over any point, and it'll show you the exact price and date. Ask yourself, is the price trending upward, downward, or sideways? That one question will tell you whether this stock has been growing, struggling, or stagnating. Now switch to the 5-year view. This is the big picture, the long-term view that shows a company's resilience, not just its hype. A great company doesn't move straight up. It dips, it recovers, it grows stronger. You're looking for a general upward slope over time, even with occasional pullbacks. Apple is a great example. Dips along the way, but an overall consistent rise. That's what long-term investors love to see. Here's what I want you to remember. The 1-year chart is your tactical lens. It helps you see recent momentum. The 5-year chart is your strategic lens. It helps you see the company's character, stability, and investor confidence. Both matter. You never want to buy based only on a 1-week or 1-day chart. You want to see what this stock has done across years, not just headlines. Now let's move down the page to the numbers, the heartbeat of any company. These numbers may look confusing at first, but once you understand them, you'll see they tell a clear story. There are 4 key ones to focus on: market cap, PE ratio, dividend yield, and 52-week range. Market cap, or market capitalization, simply means the total value of a company's shares. It's how big the company is. A company with a market cap over $10 billion is usually a stable, well-established business. what we call a blue chip stock. Think of this as the foundation of your portfolio. You want companies that are strong, proven, and not likely to vanish overnight. Next, the P/E ratio, which stands for price-to-earnings ratio. This number tells you how much investors are willing to pay for every dollar the company earns. A lower P/E usually means the stock is undervalued. It might be a good deal. A high P/E might mean the stock is expensive or that investors expect massive growth. As a general rule, P/E below 15 is considered cheap. Between 15 and 25 is reasonable, and above 25 is high growth territory. But remember, numbers never tell the full story. Context matters. The third number is the dividend yield. This tells you how much income you get just for owning the stock. Some companies, like banks or utilities, pay higher dividends to their shareholders every quarter. That's money in your pocket, or even better, money you can reinvest to buy more shares and grow your portfolio faster. If you love the idea of getting paid just for owning part of a company, dividend investing will become your best friend. The last number is the 52-week range, the highest and lowest price the stock has traded at over the past year. If the current price is near the low end of that range, it might mean the stock is undervalued or on sale. If it's near the top, it might be overvalued or due for a pullback. This helps you time your entries wisely instead of buying at emotional highs. Now, I want you to write this down or take a screenshot. Your Tossie Advisory 4-step stock checklist. Step 1. Look at the 5-year chart. Is the stock generally trending up? Step 2. Check the market cap. Is it over $10 billion? If yes, that's a strong foundation. Step 3. Review the P/E ratio. Is it between 15 and 25? That's a balanced growth zone. Step 4. Check for a dividend yield. Does the company pay shareholders? That's passive income that builds wealth. If the stock meets at least 3 of these 4 criteria, it's a strong candidate for your watch list. Now that you know how to analyze a stock, let's talk about why this matters for you. Most people never take this step because they think investing is complicated. But here's the truth, it's not. It's just unfamiliar. Once you do it a few times, you'll realize you can look at any company and instantly tell whether it's worth your time and money. That's power. And that power doesn't come from luck, it comes from literacy. That's what stock investing for poor people is all about. It's about empowering everyday people, not hedge funds, not billionaires, not bankers, to understand how to make their money work. The average person can learn to analyze, plan, and build wealth from the ground up. You just have to start. And that's why the Tossie Advisory Group exists, to teach, advise, and guide you step by step. On our website, tossieadvisorygroup.com, you'll find free resources, stock journals, and our premium community. For a limited time, you can start with a 7-day free trial to experience our premium tools, including the digital Stock Investing for Poor People journal, live workshops, and our Poor People's Picks of the Day, where we break down real stock opportunities you can learn from. So don't just watch this video, take action. Open your account at Vanguard, Schwab, or Fidelity. Pull up Yahoo Finance. Look up the companies you buy from every day: Apple, McDonald's, Nike, Walmart. Study their charts, learn their patterns, and start small. Buy 1 share if that's all you can afford. 1 share is still ownership. That's the Tossie way, small steps that compound over time. Consistency over perfection. Progress over fear. When I say you'll never be financially secure saving your paycheck alone, I mean it. But when you invest that same paycheck, even $25 or $50 a month, into companies that grow, pay dividends, and compound over years, you change your entire future. You create a story where your money starts working harder than you do. So go ahead, like this video, share it with a friend, and subscribe so you don't miss the next episode in our series. And remember, financial freedom isn't just for the rich. It's for the poor, the broke, the disciplined, and the determined. It's for you. This is investing for complete beginners, the Tossie Advisory Way. I'm Maria Tossie with the Tossie Advisory Group, and I'll see you in the next tutorial.